Hello guys, my name is CryptoCape. Today I'll be discussing breakout structure. I have seen a lot of people getting this thing very wrongly and they're not getting it accurately, thereby leading to loss of trades and loss of money eventually. So we all know that in market structures, we have bullish market structures, which is a series of higher highs and higher lows, and a bearish market structure, which is a series of lower lows and lower highs. And for every structure, either bearish or bullish, we have reversals. A bullish structure will reverse to become a bearish structure. Likewise, a bearish structure will reverse to become a bullish structure. And when we combine it together, we get this, something like this, which is the entire market structure. So when does a bullish market structure reverses, or when do we have reversal on an uptrend? I have always mentioned that the last low leading to an higher high is the most important low in a bullish market structure. We have 2 points that we want to pay attention to in any market structure at all. That is the high and the low. Not just the high, but the high leading to a new lower low, or the high created from an higher low, like this, and also like this point, that high and this low. These are the 2 most important points in market structure. This is the last high leading to this new highs. This was resistance broken from the move originating from these higher lows, thereby creating a new highs. That is the most important levels in any market structure. And pending to the creation of this higher low and this higher high, this particular low and this high would be the most important. These new lows, this higher low, would be the invalidation level on this setup, whereas this high, if there happens to be a pullback from this side like that, then this high will be the continuation high to break for the continuation of bullish structure like that. If this side refuses to break, then probably we are entering into a range until either this side is taken out with a close, or this low is also taken out with a close. That is why these two levels are the most important levels when talking about market structure. And what are the mistakes people do make when we talk of reversals in market structures? People can get to see a move like this. We have a low to an high, higher low, higher high, higher low, higher high, and then something like this happens. We have an higher low, right? Then we have a lower high, and then we have a break of this higher low. Number one, some people seeing the creation of a lower high, they have assumed that the market is reversing, that the momentum is also drying out. Some people will combine this with RSI indicator to validate their assumptions that the market is reversing. Likewise, some people will take the break of this particular low to mean invalidation and to ascertain that the market is reversing. Are these 2 scenarios correct? No. This definitely is an higher low, and this definitely is a lower high. But like I said, this is the invalidation level. The last lower high, the last higher low leading to an higher high is the most important level you want to pay attention to. Failure in price to go below this low within this range, this low and this high, means we are ranging. People who trade patterns can easily join these 2 lows together like this and see what we call a bullish flag or a descending channel, and they expect another up move, another down move, and a break above, something like this, and a break above. Some other will expect a bullish break above right from this very moment. So when we look at Elliott Wave as well, every waves happens in impulse and pullbacks, and in every impulse waves we have 5 impulse which become subwaves like that, and we have 3 correctional waves which is ABC like that. So for there to be 5 impulse wave, if this big move happens to be on a bigger time frame and you then go to a lower time frame on that particular move, like on this move to this, from this very low to this very up, some people we can't say 1, 2, 3, 4, and then we expect the 5th move. But if you go to a much lower time frame than this, 50 minutes, maybe go to 3 minutes or 1 minute, you are going to see a proper waves like this. It might be more than 5, it might be less than 5, and the correctional waves might be ABC pattern, or it can also be SY something. I'm not an expert in Elliott waves. It can also even be 1, 2, 3 to 5. So for this to happen means if you get a correction like this from this very top to an higher low, to a lower high, to another lower high, lower low, to this very high, but not this, then we are still correcting on this particular move from this low to this highs. But if we happen to break this invalidation level with this last move like this, and we have a close below it, then we 100% agree that we have a bearish break in market structure. This is because the moment this low breaks, it is our confirmation that the market is reversing, not this low, because we can have a move up to this extent, which means we are ranging between this last high and this higher low, and either we break up to continue our bullish movement, or we break down to confirm reversals. So it's either of the two. If it's A, it's either A or B. So when you have this break of this low, it doesn't guarantee that we're necessarily reversing. Either we have a lower high, it doesn't guarantee that we're necessarily reversing. But the moment you have a break of these lows, it shows we are reversing. The same thing as for this bearish structure. We have this lower high leading to these lower lows. So from this particular point, it's either, assuming we correct like this, then it's either we create a new, and what's it called? It's either we create, let me use this much easier. It's either we create a new lower high and then continue to the downside, or we can have something like this, which means this bearish structure is still very much intact. The break of this highs here doesn't guarantee that we are now bullish. So many people take this as reversal, and then people draw trend lines from this low to this low, and then say, oh, we have higher lows, then they check the right side to see divergence. Divergence does work, yes, I know, but we must break the lower highs, which is an invalidation for this trend, before we can ascertain that we are bullish. Because in most cases, you will see a reversal from this point only to create new lows, whereas you are already taking a long entry at this point, only for price to come, fill you in, and then take out your stop, and then come back again and proceed lower. So what we want to see is something like this, then a break of this. The moment this high breaks, then you ascertain that you have a new low, which becomes your invalidation, and a new high, which becomes your new bullish continuation. Then you expect maybe a retracement and then a continuation higher. But failure to break above this lower high which is an invalidation on this bear trend, means we are still either ranging. We can go for as long as it wants. A range is a range, and many people will connect this like this and see a bear flag or ascending channel. And trading patterns, we know ascending patterns like this leads to a breakdown in price. So, but the moment this breaks, then the story changes. So that is it. And do not forget that we have like series of waves like this on lower time frame. Then we can have this. That means sometimes you might have a break of this invalidation because this entire 1, 2, 3, 4, 5 moves on a much higher time frame is just a single move. So if you have a break of this invalidation level, the trend is bearish on that particular time frame. But on an higher time frame, which this whole move becomes just one move, it might be a pullback and then continue higher. This means you want to look at a particular time frame, watch market structure on that time frame. If you trade multiple time frames, then look at an higher time frame, because you might have a move like this on a time frame. That's 1, and this is 2. So if you take this now, 1, 2, what are you expecting? A move higher. If this particular point holds as your lows, then you expect a move higher. And we have something like this in it. So if this invalidation is taken out, it might on lower time frame, and you look at your higher time frame, and then it is something like this coming to around this area where you have your higher time frame long. Then on that higher time frame, you want to consider a long after getting confirmation. And how do you get confirmation? You want to go back to the lower time frame where you have witnessed a break in structure, a break in the bullish market structure, because you will see a reversal on that particular time frame as well. So assuming we have the move like this, assuming we have this move on the daily time frame. Let me remove this. We have that move on the daily time frame, and we have this move. Now we have confirmed I'm placing this here and not here, because I want us to be sure that we're in a bullish trend. So we have this low to this high, to this higher low, to this higher high. So our expectation is a new higher low, and we expect an higher high. So this comes here like this. We have this low, and this is our 1 hour time frame where we have these multiple waves. And this is our daily or 4 hour, but this is our lower time frame. So we have this breakout structure now this is our structural level to break on the 1 hour. So we have broken structure on the 1 hour. Now let me remove this and put it side by side. We have broken structure on the 1 hour, but on the daily time frame we are still bullish, and probably we are looking for long anywhere from this level to this level. The break of these lows on the daily time frame means the market has also changed on an higher time frame. But now we want to see a reversal on this particular 1 hour to take a long trade on this daily time frame. So what are we expecting to see? Probably a pullback and even another lower low to this low. Then we want to see a break of this. This is a low. This is a high leading to a new low. So that becomes the invalidation on this particular bear trend on the 1 hour. And the moment that changes with a break and close above of it, then we want to start looking for a long entry on the 1 hour time frame. And then we can take the 1 hour entry and then expect an higher high on the dailies. Now let's quickly look at this chart to see an example of what I'll be saying. So if we scroll back, okay, let's start at this point. Now we see a lows here, and we have this highs. Then we have this new lows leading to this new highs. Definitely, this point becomes our invalidation level on this low. And the moment we have a close up below this, it means the trend has changed to a bear trade. Then we are going to mark our important 2 points, right? That means this highs, and then we have this new lows. A break below this means bearish continuation. A break above this means bullish reversal. Now we have from this low, we have a pullback to this upside, and from this upside we ended up going below this continuation lows. So this highs becomes our invalidation point or our breakout structure. Now we do not need to check the lows, but at times we need to mark it to know when lows are broken and when continuations happen. So let me use this. So we have this as a breakout structure and this as continuation of the structure. Then from this low we have a pullback and a lower low. So we have a new invalidation, which is this side, or the high to be broken with a close for us to ascertain a bullish change in structure. And then we have these lows. Then again we have a pullback with a new lower low to these lows. That means we have another structural high to break for a bullish structure, and we have a new lows. So these are the 2 points I have been marking, and as you see, we are still in a bear trend. And the moment from this low, we have this high, we have a pullback. The creation of a lower low is okay, but the creation of this higher low is already signifying to some people that we are already in a bullish trend, which is not necessarily so. Then what happened? We reigned for a while, then we were able to break above this structural point, which means we have a new low and we have a new high. That means this our new highs becomes the bullish continuation, and this lows becomes our invalidation on this bullish trend. But then look at this look at this low. This was the last lower low leading to this higher high. So I personally would take this low as the low of interest. Why? This is my bullish continuation. So we have a pullback and we have a new higher high, even with a close. That means this new lows becomes our important higher low leading to an higher high, and that is the point that needs to be broken for a bear market to kick in. And coming from this side, we then broke these lows, which means we have bearish reversal. Okay, this low is taken out. That means we have this high leading to these new lows. Then we have a new low, and we have to break this high to continue our bullish trend. So as we are proceeding, we have these new highs will lead to a new lows here. That means this is our new highs. We have to watch for structural level for a break to resume our bullish or to reverse bullishly. So this is a continuation low to break for the bear trend. Now look at this. Look at this particular level. From this side, this is our breakout structure, right? This is the last high, lower high, leading to a lower low. But then we have from this lower low, we have this move up. We have an higher low. And some people are already seeing bullish reversal the moment we have an higher low to this, like I explained earlier. Then we even have an higher high to this side. Other people, even with a close, right? If you take with a little close on this candle, if people now are seeing an higher high to this, as you can see from the diagram, we have an higher high to this. Now people seeing this higher high are taking it that the market has reversed. They are now waiting for the break of this structural level or invalidation level, which is a breakout structure, before they ascertain that the market has reversed. Then we have this pullback again, which happens to be another higher low. Then we have this, which happens to be another higher high. Now they are taking this trade from this point, targeting these particular highs, not even targeting these very local highs. Because in as much as we are between these very lows and these very highs, means we are ranging. We have another pullback, another higher highs. Then we have another pullback, and what happened? We have a continuation low, which means we have gone lower than the last lower lows. Then we didn't have a close below it. At times we need a close to confirm that yes, we are really going down. Then we have a pullback here, and then what happened? We dropped fully down. The sight of higher lows on this point and higher highs on this point is giving people the confidence that the market is already in a bullish state. So they are looking for longs and targeting the top. Whereas we are still in a bearish trend for the fact that this last lower high leading to a lower low has not been taken out. And at the end of the day, we retested the supply here, and then bazook, we went down. So from that particular low, this now becomes a new low. This highs now becomes a reversal highs. You can also use this. It is only dependent on you, because we have an high here. This is a high that led to the move, and we have a strong bearish presence from this side. So what happened? We have a new high here, which becomes an invalidation for the fact that it went lower than the last lower low. It didn't close above it, which means we are skeptical of taking a short trade the moment we do not get close below it. But this becomes a new breakout structure. And what happened? Market reversed. So where is the low from at which that happened? Since we broke these highs, it is this last low. And then we have a bullish continuation highs. We got a pullback, and at the end of the day, we have an high. So from that pullback, that is an higher low, to an higher high than this. This becomes a bullish continuation high. This becomes a breakout structure. Now look at this. From this very high, we have a tipped or a stop point at this level. We have just a little wick below it. And then what happens is that the moment we have a little wick below this and price not closing below it, means we are not necessarily changing structure, but we are being stop hunted. Smart money are trying to shake us out of this market. So in this scenario, we want to see if we are still going to make an higher high, or we are just going to make a lower high and then come back to close below it before we ascertain the full change of structure. But at the end of the day, we made an higher high to this very high. So we mark that high, and then we mark the lows that led to the new highs. That is a breakout structure, and this is a break for the continuation of bullish move. We then had a pullback. This happens to be the lowest low on this pullback. Then you can mark that, and we had an higher high from that. And this brings us to this current level, where we have a pullback again, leading to an higher low. And from what we can see, we have a move here, we have an high here, we have a break here. People are already believing this is a bearish move, and some people are already shorting. But then what do we have? We have an higher low, and right now we still have a lower high to this. So this high still remains our high to break for a bullish continuation, and this low still remains this low. Exactly, it's lower than this. So this low still remains our invalidation of breakout structure to change to bearish market structure. So for a fact that we haven't seen a higher high to this side or a lower low to this low, means we are still ranging. So currently we are ranging, and the moment we go below this or above this, then we have resumed or reversed. So that is how you can easily follow market structure with reversal signals. So anything you haven't understood from the past, I hope this video is clear enough to clear your doubts on market structures and the most important highs and lows in the market structure. Thank you for watching, and do not forget to subscribe to this channel for more detailed content and guidance on how to become an expert trader. Thank you.